I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
You're looking at a long list of bad economic news today. Let's start off with car sales.
Yeah, this was a really news-rich morning, and most of it was bad. GM, General Motors' sales, fell by 18% in May, and Ford's was down by 5%, which might imply that the car boom in the U.S. is finally petering out. You know, this was one of those subprime-y kinds of things for the last couple of years where the gullible media would take these big car sales numbers that were coming out and say, oh, you know, the sector's booming, this is great times for the car industry, and it must be good for the economy if all, these people can all afford to buy cars. Well, what was happening was that the lenders who were making car loans were working their way down the ladder of creditworthiness, and were deeply into subprime. And so they were lending for 6 or 7 years to people who didn't have very good credit ratings to buy brand new cars. And what that does is two things. First of all, it saddles people who shouldn't have a lot of debt with even more debt. And it steals from future sales. If you buy a car with a 7-year car mortgage on it, you're not going to buy a new car very, very soon. And so that means that future car sales will be lower. So anyhow, that's starting to happen now. You know, what you would expect from something like that, which is radically slower sales in the future. Well, now we're kind of in the future. And U.S. car sales are starting to fall. But beyond that, you know, oil prices fell hard this morning as output is apparently rising, and Japan's Purchasing Manager Index, which is a measure of their manufacturing industry, fell to a 40-month low, and U.S. manufacturing activity was up slightly, but within that, construction spending, which is a big indicator of future growth, plunged. And China's manufacturing and services PMIs, both, that's factories and service industries, fell in May. So anyhow, you have lots of bad numbers like that, all pointing towards a slowdown in the global economy. And there's nothing out there really that was issued this morning or any time recently that point to dramatic growth. So I think that the whole, the Fed is going to raise interest rates because the U.S. economy is growing thing will be debunked pretty soon. Maybe they'll raise interest rates one more time because they really, really want to. Because low interest rates are hurting the big banks who own the Fed. That's the bosses of the Fed are the guys who are most hurt now by low and falling interest rates. So the Fed really wants to raise rates, but that'll cause so many distortions in an already slowing global economy that I think within the year they will be reversing out whatever they do in the next couple of months and cutting interest rates really dramatically.
Does the U.S. have a lot of room to move, though, with interest rates?
Not really, because the rest of the world is still cutting interest rates. So to the extent that we raise interest rates, other things being equal, we make the dollar stronger. And if you look at corporate earnings in the U.S., which were down like 7% year over year, that's a really big drop in a year that's not a recession. Most companies are blaming their falling earnings on the dollar being too strong. So if we make the dollar even stronger going forward, then that's going to make corporate earnings even harder to generate and probably lead to companies putting up bad comparisons year over year, which is bad for the stock market. So if we get a bear market in equities, then it's not clear that the U.S. economy can stay out of a recession in that case. So we might find ourselves back into a recession that could easily metastasize into something nastier than a garden variety recession if we let the dollar go up from here. But if we don't, let's say we push the dollar down from here, that's the same thing as saying the euro and the yen and the yuan go up in value. And those countries can't handle a strengthening currency because they're already right on the edge of the abyss. And let the currency go up, which will hurt corporate profits and slow the economy, other things being equal, and they're in big trouble. So there's really no way out of this, Jim. No matter what we do, there's a downside that is potentially catastrophic. And that's not a surprise that we've reached this point, given how much money we've borrowed, but it is a surprise that we allowed ourselves to get here. If you borrow way too much money, you run out of options. And then nothing works, and something bad happens. That's how it is for individuals and families and for countries and for global financial systems. So we're at the point now where there's no fix for any of this. There are ways to put the reckoning off for a few months, and that's what we're trying around the world now. Because monetary policy is perceived to have run its course, and low interest rates are actually, as I said, hurting the big banks. The governments of the world are starting to shift back to deficit spending. So they're going to ramp up public spending, try to get money in the hands of individuals, and then pay for it by borrowing. And then pay for the borrowing by creating new currency. And amazingly, they're going to do that despite the fact that they already did it just lately, and it didn't work. China quintupled its debt between 2008 and 2015, and its economy is barely growing right now. It got a short-term pop, which is what you get when you borrow lots of money, but now the bills are coming due. The debts that they've taken on have to be paid back, and they are having trouble doing it. Same thing with Japan. They borrowed immense amounts of money over the last few decades, and now their economy isn't growing at all. And they've got this demographic time bomb at the same time. They've got so many people getting old and retiring that the public cost of all those retirees is going through the roof. And so their budget is going more out of balance instead of coming back into balance, which is what you would expect at the tail end of a nice recovery. And, in the U.S., we're doing a little better on the surface than most of the rest of the world, but we have also had to borrow huge amounts of money to get there, and then we've leveraged our private sector to the hilt, with the car loans that we were just talking about, and corporate loans in the U.S., corporate debt, is at record levels. U.S. corporations have been borrowing money year after year after year to buy back their own stock. They're not even investing in new factories on any reasonable scale. They're mostly just taking that money and they're giving it back to shareholders in the moment by buying back stocks or by paying dividends. And so that's not increasing our productivity in any way, but it is increasing corporate leverage really dramatically. So that trend is kind of starting to peter out too, because companies are starting to be punished for borrowing too much to buy back their stock. They used to be rewarded because everybody would bid their stock price up, assuming that the company was going to be the buyer of last resort. So go ahead and buy IBM stock because IBM's got your back. Well, now it's don't buy IBM stock because IBM has leveraged itself to the hilt, and look, they're even borrowing more money now, and so they've got a crisis coming. We don't want to own that stock. And so that sentiment is starting to spread so that the companies that are the biggest offenders, who are borrowing the most money in order to buy back their stock, are no longer seeing their stock price go up as a reward for borrowing all that money and buying back stock. And so you're seeing a lot of trends now that gullible talking heads and money managers took to be positive trends, but really weren't, petering out now. And it's not clear what replaces those trends. Well, it is clear what we're going to try. It looks like we're going to try dramatically ramping up government spending again, but, it's not clear how that fixes anything, because borrowing even more money after we've borrowed record amounts of money and it didn't work is one of those definitions of insanity where you keep doing the same thing over and over again, but you expect a different result each time. And so we're going to try it again. I suspect the results will be bad, and the question is when we'll find out about that. When will it all hit the fan? And that timing issue has turned out to be really hard to predict. But I think it's reasonably quickly in this case because we're so far beyond any normal level of leverage in the global financial system.
We'll have more with John Rubino right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Rubino. One place perhaps where they don't have negative numbers is Germany. The other day they claimed their unemployment was at a record low, but is that a true figure? I mean, have they given jobs to all those hundreds of thousands of migrants they accepted?
Well, the job situation in Germany is pretty good. And there are other macro statistics, like their trade balance and their government debt, et cetera, are all pretty good on the surface. But what's happening with Germany is that because it's the center of the Eurozone, it has been, for the past 15 or so years, doing essentially vendor financing, which is where a company lends money to its customers so the customers can buy the company's products. Well, Germany, at least the German banks, have been lending money to Italy and Greece and Spain and Portugal. And then those guys have been turning around using that money to buy German stuff. Germany runs a trade surplus with the rest of the Eurozone. And so that has given Germany really good numbers. But most of those other countries can't pay their debts. So Germany is going to have to take that debt back on its own balance sheet at some point. And at that point, it's not going to look nearly as good as it does now because all of a sudden its government finances are going to be way, way out of balance. Its debt to GDP ratio is going to be much higher than it is today, or the European Central Bank is going to have to create a huge number of new euros in order to bail these failed states out. And that's probably going to devalue the euro, which means a lot of German assets priced in euros won't be as valuable anymore. So either way, it won't look as good 5 years from now as it does today for Germany. And the reason will be that they've been running, maybe a con is too strong a word, but they've been operating with fairly unsound principles. And eventually that comes home to roost.
How big of an impact would it be if Britain decides to leave the European Union? That would just leave Germany dangling on their own, wouldn't it?
Oh, who knows? Yeah, this is really uncharted territory because nobody's tried to leave a big integrated economic union like this before. At least nobody as powerful and large as the United Kingdom. But you can kind of see the UK's point. Immigration is really the big issue. Although there are a lot of other problems with the European Union. It's this opaque entity with a huge budget and people who have these really sweet jobs who get paid a huge amount of money to do things that nobody really understands or gets. And, most people in Europe don't even know who their representatives are in Brussels. They just, accept it as sort of this distant dictatorship that sends a lot of regulations their way and doesn't otherwise do anything else. So Britain is suffering under the regulatory wet blanket of the European Union, and it can't control its own borders because part of the deal with the European Union is that you have open borders where anybody who's within the EU can travel to any other EU country, which sounds great in theory, unless you let in a whole lot of people that don't assimilate and don't really function well in this extremely liberal culture that Europe has created. So Britain's worried about, for instance, the negotiations that are now ongoing with Turkey through which the European Union will let all the Turks travel without visas to any EU country, and that's like 90 million more Muslims. And so, to the extent that a lot of people in the UK are worried about Middle Eastern immigrants coming in and not assimilating, this is a much, much bigger deal than anything that's happened before. And that's kind of energizing the Brexit vote. And right now it looks like the Brexit people, the leave side, the people who are going to vote for leaving the EU, are slightly up in current polling. And I think it's, Jim, is it the 23rd of June?
Yes, it is.
Have the referendum? Okay, so that's still a while away and a lot can change, but the momentum seems to be shifting towards the UK leaving the EU, and that will be a big deal when it happens. And the consequences are unpredictable. I think in the long run the UK would be better off, but the long run can seem like an awful long way away if there's a lot of turmoil going on as your financial markets no longer have any kind of certainty, and your big companies now have to figure out which regulatory regime they're going to operate under and adjust accordingly. It's a lot of very messy kinds of changes that might have to happen. But it sounds like UK citizens are, at least quite a few of them, are willing to chance it.
Well, the nationalist candidate in the Austrian elections lost by mere fractions, and they wanted to ban immigration as well. So you can see in a lot of Europe there is a real anti-immigration sentiment. Yeah,
there really is. The Austrian election was fascinating. The presidency there is a figurehead. It wasn't somebody who's just going to come in and make the changes that he was proposing. But what happened was the two main parties, their version of the Republicans and the Democrats, didn't even make the runoff vote. They lost in the first round and had to sit on the sidelines and watch a Green Party candidate run against a far-right candidate. And the far-right guy almost won, like you said. He came really close. And there are still allegations of voter fraud on the part of the establishment to keep the far-right guy out that I guess are being investigated. But yeah, you see that all over Europe right now. Whether it's the far right or the far left, people who used to be fringe candidates and fringe parties are getting a lot of votes. So you've got National Front in France, which is right-wing. You've got UKIP in the United Kingdom, which is right-wing. And then you've got Podemos in Spain, left-wing. And Syriza in Greece, left-wing. And the Portuguese just put a left-wing government in charge. So it's not really a right-wing or a left-wing movement. It's basically a fringe movement. And it's an anti-establishment movement. People just don't trust the guys in charge anymore. So they're willing to consider people who propose changes. And they're not all that concerned with whether it's from the right or from the left that they're proposing these changes. They just want something new to happen.
Does that explain Donald Trump?
Yeah, he's a perfect example of that. He represents, if he represents anything, it's a break from the past, or a break with the past. And so people, especially working class Caucasians, apparently in the U.S., feel like they've really been disadvantaged by the system. They're unprotected from the adverse consequences of the policies that the elites are putting into place, and they want somebody to speak for them. And so they've chosen Donald Trump because he's willing to say the things that these guys are thinking. And so, there's actually a chance, Jim, that he might win the actual presidency, not just get nominated, but be our next president. That is amazing. And then, Hillary Clinton is having a very tough campaign against somebody else who's an outsider, Bernie Sanders here. He's an avowed socialist. And in times past, it was really hard for anybody using the S word to get elected. We've had some extremely liberal people run and do all right, but they always call themselves moderates. And Bernie Sanders just flat out says, yeah, I'm a socialist, and I want to give you free college, and I want to give you free health care, and I want to give you free housing, and that's the kind of stuff that people of a certain age remember having failed around the world. So that's why Hillary Clinton does really well with older Americans, and Bernie Sanders does great with younger Americans. Because the older ones, they remember when socialism was tried and crashed and burned almost everywhere. But young people don't have that sense of history. You know, it's not real for them. They might see it in a textbook, but hearing somebody stand up and say, you know what, you deserve a $15 an hour minimum wage now and free college, blah blah blah. You know, and that sounds good. You know, they're thinking that's better than the deal they have today, and so they're willing to vote for somebody who's proposing stuff like that. And so, yeah, you know, this is all the kind of thing that happens when you borrow too much money. Basically, the system stops working, and then people get disgusted because the powers that be aren't able to give them the stuff that they have expected up until now. And so they gravitate towards people who promise to take care of them in one way or another, or to tear down the old system and build some unspecified new thing in its place. And, you know, that's appealing in times when the system itself is failing. So I think we're going to see this around the world, and I think this is just the beginning. You know, let's say Hillary Clinton, the establishment candidate, wins here, and so we get pretty much what the mainstream expected we were going to get, President Hillary, at the beginning of this process, and the United Kingdom stays in the European Union, and mainstream parties win in France, yada yada. Well, that won't be the end of the process, because the fact that these guys made a serious run, you know, the outsiders made a serious run, is going to embolden them for next time around, because the mainstream political parties and mainstream leaders aren't going to be able to fix anything. They're just going to do the same stuff that caused all the trouble to begin with. So our problems are going to grow more and more serious, and the people who almost won last time around are going to be able to say, yeah, you know, you should have voted for me, I told you. And it's going to resonate. So if this isn't the election cycle that causes an earthquake, the next one certainly will be. You know, it's coming one way or another.
John, thanks a lot for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble. His website, dollarcollapse.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.